here is where we're actually focusing around the risks and opportunities when we talk about private equity in the year 2022. And joining us, we have with us none other than Bill Ford, Chairman and CEO, General Atlantic, who will be sharing his thoughts with us. A leading global growth equity firm that we all know of, and he comes with more than 3 decades of experience investing in and helping build leading growth companies. Under his leadership, General Atlantic has also expanded its global presence, increased its capital base, and deepened its capabilities to identify and partner with high potential growth companies across multiple business sectors and geographies. So while we find out more about the risks and the opportunities, we will be having Arijit Barman, Deputy Resident Editor, the Economic Times, who will be spearheading this conversation with Bill Ford. So let's deep dive into it.
Joining us all the way from New York at the heart of Wall Street, Bill Ford, the CEO of General Atlantic, a friend, an Indophile, if I may call him. General Atlantic has been in India for over 2 decades, several investments, one of the earliest tech investors in the country, but now, of course, have a far diversified portfolio. Bill, thanks a lot for taking time out and doing this. Deeply appreciate it.
Thank you, Arijit. Thanks for having me, and it's great to be back with the Economic Times. So I'm thrilled to be at the conference and also to engage in a conversation.
Thank you. Let's get straight to business. And one of the things that I noticed that last year we saw an unprecedented capital raise, not just GA. It's different because it's a captive pool of capital, but for the others as well, for private equity as an asset class. But in the new year, just a couple of months into the new year, we are facing huge uncertainty around the world thanks to the Ukrainian invasion, the Ukraine invasion rather by Russia. Will their deployment be therefore a big challenge in 2022? How do you think all this affects the investing environment?
Well, Arijit, you're right. 2021 and even 2020 were some of the most exceptional years we've ever seen in private markets around the world, both in terms of capital raising, which set records, but also new investment activities. It was almost the golden moment for private equity and private capital. And it was really a function of a lot of deal activity, COVID recovery, the fact that the economy was really beginning to perform after a difficult 2020, and all that led to record deal activity. We completed 25 IPOs last year, so it was also some of the best exit conditions we've ever seen in private equity. So all that really, again, came together to make an incredibly positive investment environment. But I think even before Ukraine happened, we were beginning to see a real shift in the investment environment. I'd like to talk about that just for a minute, and because I think it's important even going into Ukraine. I think the markets were beginning to recognize that post-COVID and with the economic growth that were happening, and also with supply chain issues, that we were beginning to have very, very real systemic inflation, and that was going to lead to an increase in interest rates. And I think that concern began to really take over the psychology of the market. And you saw below I like to call it below the waterline of some of the very, very large cap tech and growth companies like Amazon, Google, Apple, Facebook, you were seeing significant corrections in valuation happening among growth companies. And so the picture I'd like to paint is the environment was already shifting as these risks became more apparent to the market. And also, I just one more comment on the environment. Growth expectations for companies really had reached an all-time high in terms of these companies were priced for perfection, and any deviation in earnings growth from lofty expectations of 50, 75, 100% growth rates were going to lead to a stock price decline, and that's really what happened. So all that was going on going into Ukraine, and now you have a major geopolitical event with a lot of uncertainty in how that concludes, and I think that's also weighing on the market. What worries me about it most is that despite the financial market correction that was taking place before Ukraine, and despite the concerns about interest rate rises, I think with Ukraine, the probability of a recession goes up. Before this, I would have said, hey, despite those concerns, the global economy is recovering nicely from COVID. Global growth will be positive. India has had some tremendous economic growth, a great example of what's going on in the world. But I think with the Ukraine, you start to think about significant disruption in supply chains, rising oil prices that may sustain themselves for a while, and the real possibility that with consumer sentiment going negative, that the global economy could be headed for a recession. And that's a much deeper concern for me as a global investor.
Mm-hmm. But you talked about big tech or valuations of big tech taking a beating, but we saw the meltdown to be far more widespread, far beyond just the FANG stocks.
Yeah, I think that's a great point, Arijit. I think the FANG stocks kind of threw you off the plot because it was really the mid-cap growth companies where growth expectations had gotten so aggressive. It was those stocks that have experienced 30, 40, 50%, and even higher levels of correction. So while, again, the large cap names, the FANGs, held up relatively well with the exception probably of Facebook, the rest of the names are down 30% plus. And I think that, again, is a reflection of a much higher concern about rising rates and a concern that, earnings expectations just got to levels that were not sustainable. Mm-hmm. And that combination, like it often does, led to an equity market correction. Mm-hmm. And one that I think is more below the waterline, is more serious than meets the eye.
Mm. So what does that mean for a firm such as yours? If you look back 2019-20, 70% of your total allocation was non-US. Will this continue, or now geopolitics will completely change your investment theme and perhaps it's back to the home markets?
Well, I think what gives me great confidence in our investment program and for many global investors is that some of the long-term secular themes are still very much intact. And India is a great example of it. I mean, the move to a digital economy continues unabated. And I think that's a long-term secular growth trend that will continue to create opportunities for investors. I mean, the rise of, we call it the rise of digital India, is fully developing and are going to create lots of investment opportunities as people capitalize on this wonderful wireless internet platform that's been created around the geo business. So I think that's one. Second, global growth led by Asia. India, Southeast Asia, and also China continue to drive global growth. And that's, again, bringing many people into the consuming middle class. It's doing a lot of, and it's really contributing the lion's share of global growth, which again is positive for investors. We're seeing tremendous innovation in life sciences and healthcare. Mm-hmm. Again, as the global middle class grows, as we see aging, and that sector, I think, is poised for terrific investment opportunities the year ahead. Climate change. We launched a climate investment fund because we saw a lot of innovation happening around companies and entrepreneurs applying technology to solve the climate problem. I think, again, that's a long-term secular trend. So I think those are intact, and those are creating opportunities, and they're a real reason for optimism for global investors. But at the same time, we have to navigate a much more complicated geopolitical and geoeconomic environment than we've had before. Mm-hmm. And so those are the things that weigh on our mind. But I come in here optimistic. I mean, we really feel like India in particular, this next decade could be the year where India really is poised for tremendous growth and tremendous innovation that will create opportunities for investors. So while you mentioned we've been investing in India for 20 years, I think the next 10 could be the most exciting of our time in India. I'm sure it will.
And I'll technology, and we were talking about tech valuations in US. In India too, we've seen several unicorns actually test the IPO market, but within weeks, their share prices simply collapse. Now, this is where someone who's a little bit more circumspect would come in and say, we are getting carried away far too much by growth and top line and less on the bottom line and the actual business fundamentals. Is there some merit in that argument?
Well, I think having been through a number of cycles like this before, you have moments of absolute enthusiasm for new technology and new companies, and that drives an IPO market, that excitement, and that's why we had such a strong IPO market in India, Europe, US, really globally in 2020 and 2021, and I think some of the correction is, again, once some of these macroeconomic issues like inflation, rising rates started to grab investor attention, investors do what they always do. They return to fundamentals. They go back to the fundamentals of growth and profitability. And they say to themselves, you know, a lot of these business models are not yet proven, are not yet profitable, are going to consume capital for a period of time. And by virtue of that are riskier. And as investors migrated to less risky investments, which they've done, a lot of those companies, even ones that I would say have tremendous long-term promise, experienced a significant correction in stock price. Mm-hmm. And I've said this to my own team, Arijit, that as these companies come back, it'll be the ones that execute on the fundamentals, that you know, manage their cash burn, that get profitable, that have attractive business models, and are but still generating strong growth. Those will get re-rated to the positive first. And I know our message to our 190 portfolio companies is focus on the fundamentals, focus on your business model, focus on getting profitable while maintaining that high level of growth. Mm-hmm. But you're right. I think we had peak enthusiasm in 2021. And we'll get to peak despair probably sometime in 2022, maybe 23. And then we'll see, I think, a recovery that will, as you pointed out, will be built on fundamentals. Mm-hmm.
I remember, you know, seeing an earlier interview of yours where you were very excited about, you know, the paradigm shift or the new avenues post the Human Genome Project. There is a life sciences focus in GA as well, and I see that in several of your you know, newer investments. If you could walk us through what you know, are there any pockets within that space that excites you the most, or and as you know, black swan events like COVID further accelerated your belief that yes, this is a bet for the future?
Well, it's an area, life sciences is really an incredibly exciting area that we began investing in about 6 years ago. Mm-hmm. And what really got us excited was we were seeing an acceleration of entrepreneurship and innovation happening. And we started to try to figure out, well, what was going on? And what really happened, like it so often does, was really a convergence of factors that opened up this market. And it was everything from the Human Genome Project that went back to the really 2000, that created some of the knowledge that was needed for innovation, tremendous advances in cell biology. If you went to the academic medical centers around the world, mm-hmm. tremendous new intellectual capital being built around cell biology and proteomics, the study of proteins. And those three bodies of knowledge came together to really allow for a lot of innovation around new therapies for problems like cancer, neurological disease, now even cardiac and other disease. And that was, we saw that beginning to happen and take shape. And also we recognized something that fit very well with General Atlantic was that this was a global phenomenon. You know, we know, for example, India has a very well-developed generic pharmaceutical industry. We were beginning to see life sciences investment and innovation in China. Europe has a very large pharmaceutical industry that was moving from chemistry to biology. And the US, of course, had established a pretty strong lead in biotech. So all that said, we're going to see a lot of innovation, a lot of entrepreneurs applying their talents to this area, and it should be a great place for investment. And I think that's been borne out. It's a very different area in some ways because you need a degree of scientific capability because a lot of this comes down to evaluating the science. Yeah. And also it's a very Arijit, for you and I, it's a very strange sector because these companies go public very often 2 to 5 years before their therapy has even been approved for human use. And so that's a strange thing. You're betting on a company well before it has any revenue. It's just doing research and has science. But we've been able to master some of those challenges, and I think we see a lot of innovation. I'm excited to see what comes out of India. Again, the scientific talent is there, the pharmaceutical base is there, and it should be another basically locus within the world where we see some exciting opportunities.
Mm-hmm. So other than consumer internet, clean tech, and life sciences, is there any other big theme or pockets that is becoming more and more interesting in markets such as India?
Well, I think it's worth commenting because it applies directly to India. Is we're seeing such such growth in entrepreneurship globally. I mean, when I got started at General Atlantic 30 years ago, the idea of venture capital and entrepreneurship and starting new companies was really a U.S., if not a Silicon Valley phenomenon. Not that there weren't entrepreneurs around the world, there were, but the breadth of entrepreneurship. If you look today, more than half the unicorns, companies valued at $1 billion or more in the growth equity market, more than half are outside the U.S. Many of them are in India, many of them are in Asia. And this globalization of entrepreneurship, this globalization of capital available to innovators is a fundamental change, and it's driving really exciting innovations around the world. So for us, it means being deeply involved in these centers of innovation, whether it's India, China, Israel, US, Europe, even Latin America is having a digital moment in Brazil and Mexico, which is also quite exciting. So again, the thing that gets me excited for the world is the globality of entrepreneurship and the impact they're likely to have. I mean, I would say one of our most exciting companies in our total global portfolio is Baiju, which is transforming education in India, led by a really incredible entrepreneur who was passionate about bringing education to the entirety of the Indian population. And he's going to change the face of India forever. And I think probably change the face of the world in education forever. And that's exciting. And that's what we want to be involved in. And our team, I challenge our team every day to go out and find those entrepreneurs, whatever corner of the world they're in. And if we can be their business and financial partner and help them achieve their goals, we can along the way make a good return for our investors. That's what we want to do. But I think the thing that's exciting me right now is the level of entrepreneurship in India and the level of digital entrepreneurship. It's always been there, but it's moved to a whole different level now. And I think the thing that we've had a great engagement with the Modi administration is about continuing to improve the IPO market so that India has a robust domestic IPO market that will attract global capital to back those great companies once they're ready to go public. And I know there's a lot of attention being placed on that matter, which is terrific.
Mm-hmm. And that brings me to my next question, is that despite all that, we do see some kind of a brain drain from India. Indian entrepreneurs whose key market is India would rather go to Singapore, the Valley, and set up their company because they say it's easier to set it up, ease of doing business. So what kind of policy framework or enabling environment is essential for a market like India, which is at the cusp of exponential growth and innovation and entrepreneurship?
A couple of comments. I think two things. One is Indian entrepreneurs have to believe they can serve the global market from India. Now we have a great example of that. If you think back 20 years when we got started in India to business process outsourcers and IT services firms, these were Indian companies with the locus of their operation in India serving a global market. So the first thing I think is entrepreneurs have to come to the conclusion, I can build a business here, I can access the incredible talent pool in India, but serve the global market. And I think we need policies that allow for that. and allow for capital to flow in and out to allow that to happen. The second is capital formation. And I think for private investors and public investors, the friction of getting capital in and getting capital out, in the private capital market and public capital market, needs to constantly improve itself. Find ways to reduce friction. So a global investor says, I'm just as happy investing in a world-class Indian company on the Bombay Stock Exchange as I am on the New York Stock Exchange. And so you're not pushing the Indian companies to say, well, look, if I really want to access global investors who understand my business, my sector, I have to go to New York or London. And I know the Modi administration is thinking hard about this, but I think that kind of reform that says the Indian entrepreneur has line of sight for an Indian IPO that where global investors can participate and get access to that growth. I think that's an important development that if India does that, it really will continue to unlock private capital formation, but also public capital formation. And Indian companies will achieve the kind of valuation that they deserve, which is a global multiple. I think that can come, and I think it'll be a big part to creating a virtuous cycle of innovation and entrepreneurship in India.
You talked about Byju's, and let me ask you this: that we've seen how China has gone about, cracking down on big tech, Chinese big tech, that is. But do you think, that actually has opened up a Pandora's box for policymakers and regulators across emerging markets, as well as developed markets, and bring in some kind of regulation for these various, newer sectors or newer companies, fintech, edtech, that are coming up?
Well, I think there's two parts to what I think is going on and needs to happen. I mean, one is we do need smart regulation by government for digital business models, and you're right to point out, Arijit, areas like financial, like fintech, financial services. This is a sector that has always been regulated by governments, and governments just need to advance their policy making to embrace digital business models, and some of them were really equipped for traditional financial services firms, banks, insurance companies, et cetera, and they really need to move in the direction of understanding digital is going to be transformative. I would say the same is going to be true for healthcare. The same is going to be true for tech companies in general. We saw the GDPR data privacy regulations coming out of Europe as a good example of, I think, of relatively smart regulation that can really, which is good for the industry, good for the consumer. And I think, again, governments, and again, I think the Modi administration has really thought hard about this, is how do we advance our regulatory frameworks to embrace these models? That's one thing. The other thing I'd say about China has moved to becoming a wonderful innovation economy with a strong domestic economy as well. So it's still a very, very attractive place to invest. But I think the thing that is changing there and for global investors is the traditional model, which was to build a Chinese entrepreneurial company with an offshore legal framework, something called the VIE structure, and then work towards a US IPO or maybe a Hong Kong IPO. Some of that's being called into question by regulators in China, and there is some uncertainty about, well, where do the great new Chinese companies go public? Do they go public in Hong Kong? Do they go public in Shanghai? Do they go public in the US anymore? And so that there's a bit of uncertainty about that. I think it's a good model in some ways to say, India, get ahead of this, figure out how you want your best Indian companies to go public. Do you want them to go public in India, outside of India? And how do you want capital to flow? Do you want to flow it into the Indian capital market, or do you want Indian companies to take like a Byju, to go public in the US and access global investors there? These are all, I think, good things to think about that will continue to stimulate growth and development of the Indian economy.
Bill, thanks a ton for taking time out and explaining to us your vision, not just for India, but how you see the whole world play out for General Atlantic and private equity as an asset class overall in this very, very volatile times. Thank you once again for taking part in ET's Global Business Summit.
Thank you, Arijit. Thank you for having me.